We are 24 hours away from the most important PC report of the entire year, arguably the last decade. And whichever side is wrong, bulls or bears, one of them is about to get absolutely destroyed. This is the moment that decides what the Fed does next week. And the entire portfolio is on the line. Here's what makes this PCE different. Markets are pricing in a perfect number, a Goldilocks reading for both teams. The magical sticking inflation right between a soft landing and a recession where it's not too hot, it's not too cold. Anything outside that tight window, boom, instant volatility, yields rip, futures swing, and tech either melts down or explodes into a Santa rally. There's no middle ground tomorrow. If inflation cools, Powell gets the green light to cut rates. We're also getting some early warning signs that he's going to do that anyway. If it doesn't and comes in hot, well, everything's breaking. Yields, bonds, there will be no safe place. And ladies and gentlemen, we're going to be breaking down exactly what this means, what markets are pricing in right now, what the PCE is going to do if it comes in hot, what the markets are going to do when it comes in cold, what levels actually matter on the S&P, because as you can see here, we're at the levels that we discussed in the weekend deep dive. If you guys aren't subscribed and missed that one, make sure you hit the subscribe down below. But again, this is significant where we are now because it is the pivotal point. This is where the bulls start to gain control. And how am I going to trade it, right? That's also the big thing. So let's get started with what Wall Street expects. And there's no better answer to that question than the economical calendar. We'll talk about those levels on the S&P in just a second. 2.9 previously was 2.9. So how I mentioned the Goldilocks scenario, they're expecting no increase in inflation year over year in the month of September or the monthly. And that is setting up to be a duality because what could happen, you could get a revision of the previous number to the upside where you get a 3 and then it drops down to 2.9. How does the markets play that? In my opinion, that is going to be a cooling inflation number, which will bolster the Fed expectations that are already set up for a rate cut in December. But the thing is, we're not really caring about the rate cut in December. It's an 89% chance. A massive thing would have to occur to swing these odds to basically back to that 11% chance right now of no rate cut. What everyone's interested in is the projection. The SCP, this is the meeting where we get the SCP, the Summary of Economic Projections. We're also getting CPI on the day of the Fed. So can you say volatility wrapped up in a gift bow? I can. And this is where things get really, really interesting because this is going to set the stage of what the market's going to front run all the way into the Fed. CPI, even though it's going to occur on the Fed, all eyes are going to be on it. Most of the price action would already have occurred in the direction that the market makers want to take it. So what happens if this comes in at a 3.1? I don't suspect that just because PCE is one of the slowest moving indexes. It is also the one that you would need to see CPI and PCE or PPI soaring up higher for this one to actually kind of rebound. Powell's expecting this to end at 3.1. So anything under that number, the markets could interpret as a bullish answer. And also 2.9 flat inflation is kind of what the markets are saying, hey, we're happy with this number. They're kind of front running that scenario. As we see here on the market, that we breached above the key level of 683.67. We went over this level because it is the weekly rotationary point. Now the question is, can we get to 689.70 by Friday close? If we do, new all-time high. Bears are going to be screaming bloody murder because I would like to refresh everyone's memory. There are 146,000 positions net short. They have to close those positions. New all-time highs means new all-time pain for them. And again, the market right now is saying, before we even get the number, you're already in pain. How long can you hold out for it? Again, post-market, it was rallying quite significantly. We were at roughly going into the open up about 0.25, 0.3. So that was already setting up to be a good open. Again, you guys are seeing it live now, so you know what the market's doing. Again, hindsight's 2020 always. One of the bigger indicators is that Bitcoin started rotating back above, started forming that W. So I look at Bitcoin to be the risk on mentality for the market. If Bitcoin is rallying, then I'm saying there is a higher probability that the broader market rallies. We can also look at the VIX, right? The VIX coming back down to cool, calm, and collected territory. And for all those that stayed to the middle of the video, I want to show you something on the S&P. This is the weekly view for LuxAlgo. One of the things that it does for me is it also shows a smart money flow and the rotationary point. As you can see here, we're starting to get a weekly green signal, which is how all these rallies, all these massive rip your face off Santa Claus rallies have started. We kind of came down to this price region here, confirmed, filled some gaps, and now we're heading back up higher. This is setting up all like 75% chance that it is a bullish reaction. It is not a guaranteed reaction. Let me be clear. We still have significant resistance at the price we are now. We're starting to break through it. As we mentioned on the weekend deep dive levels, the S&P is sitting at a critical inflection point that it needs to close on the week. That does not mean we're here, check the box, move on. This is the yellow flag. It's not the green flag, it's the yellow flag, because it is setting up to be a positive rotationary point. The deck is being stacked against the bears. It's being stacked for the bulls. We can also look at the NASDAQ to see if it's doing something similar. The NASDAQ actually is on a weekly higher high already, signaling the NASDAQ is leading. Tech is leading. NVIDIA, Palantir, AVGO are all the leading assets in this. And speaking of Palantir, having a little bit of a nice bounce, and you guys probably are getting back above the 50 as we speak now. So if you've been wanting to buy Palantir, this is going to be the time once it gets back above that 50-day moving average. It's going to rip everyone's face off. Make sure you guys keep an eye on that one. Broadcom was having a bit of a pullback recently. So if you guys have been wanting to get Broadcom, that little wick right there is probably what I'd be looking at. And the Russell, last but not least, again, is breaking out, is setting up, is tackling that 252 number. It is setting up to be a bullish rally. We already have two indexes confirming weekly breakouts. The S&P is not far behind in post-market, breaking back above that level. And actually, we close above that level today by a smidge. But again, post-market confirming that rotation. The broader indexes are rotating. Bitcoin's staying relatively okay. So now the question is, can we get to new all-time highs? Is PCE going to pump the brakes on that? I don't foresee that. I think that the market has stayed in fearful territory for way too long. I mean, guys, like, this is just insane. Like, when we look at this graph right here, it is absolutely insane. We have spent 75% of the year in fear, and not just little fear, extreme fear, where we're supposed to be selling off, and we've been rallying this whole time. So either people are completely irrational, and again, the famous quote of the world, markets can stay irrational longer than investors stay solvent. I think we're putting that to the test to see how long these bears are staying solvent, because boy, oh boy, they keep finding money to short the market while it keeps going up. Infinite money printer, I don't know, but we are seeing some concerning signs, right? So this is the emergency lending facility. We're starting to see more and more people coming to it. The severity of these spikes are getting worse and worse and worse, which is the market's in a very large inflection point. Either we're going to rally Santa Claus rally style into an insane couple of years, or we're going to crash hard. Either one, I'm going to take advantage of. But seeing how the Fed reverse repo is out of money, we see the M2 money supply getting ready to break to new all-time highs. We haven't actually got the data for, well, October is higher than August, but we haven't gotten the November data. Regardless, the Fed's going to print a crap ton of money as Jerome Powell's term comes to an end. So this SCP is kind of the last little straw that Jerome Powell can do. Throw it out there, see how things go. But just looking at the broader market, it is setting up to be a very bullish reaction. We are not setting up to be bearish. The market is front running it. We can also look at the leaders like NVIDIA wanting to break out, need to get back above that 183. Take a look at it today, see what it is. If it's above 186, then oh my God, bull time rally, Santa Claus rally, put your hat on. It is time to go. For all those that missed out on Netflix, had a big drop recently. Again, managed to hold that weekly level, so check that one out if you've been wanting to buy Netflix. My only concern with it is the bearish cross that is occurring right here. Probably the other company that I'll be looking at is Meta. Again, similar story of these two companies being extremely undervalued and coming to a point where you may actually pick up some really, really cool discounts. May have to wait on them a little bit. But again, make sure you guys like, comment, and subscribe down below. And check out the latest two videos linked on the bottom left here, where you can see the weekend deep dive and our latest analysis on the AI bubble, or is it really a bubble? So make sure you guys check that out. Discord on top left. Thank you all so much for watching. I'll see you in the next one.